Welcome back to Stock Shark, folks. We will be looking at next week trading plan. It's going to be very interesting next week trading plan. This is for the week of 27th September 2021. Let's dive into some of the events that happened last week. FOMC announced about their tapering news as expected. They said they will start the tapering soon. What we are talking about, they are doing right now $120 billion per month purchase, and this is $45 trillion fixed income market. The $120 billion is, it's like a drop in the bucket or drop in the ocean. It's no big deal at all. And also tapering means what they will be doing is they will be reducing like $10 billion per month, in a way that by approximately by middle of next year 2022 they would complete that entire asset purchase program. So 10 to 15 billion per month they will start tapering, right? So that means we can expect some sort of tapering of 15 billion starting from December. So that would be around $105 billion purchase. Then they will go on 90 billion from January. Then February they would be like 75, so and so, right? But it all depends on they put caveat how economic activities are picking up. So far it's okay. Economic activities are good. I think they would listen to September unemployment report that is going to get published on first week of October on that Friday. I think that report is vital. So I would say next week is calm before earning season, or calm before storm, right? Otherwise, no major market activities getting reported next week. The one positive thing last week was, as on Friday 24th September, the VIX is closed below 18. That is very bullish. So that means market is digesting the news, FOMC news. This is in this time, if US Fed, the Mr. J. Paul really communicating well, and they are communicating ahead of time to avoid any negative surprise. So that is positive, and there is a Fed put out there all along since 2009. Fed put is there. Then the only thing right now limbo is this Chinese real estate developer Evergrande. It's looked like they defaulted on last Friday, but the thing is technically they have 30 days grace time. That means another 1 month they have a time to pay that whatever amount they are supposed to pay interest rate on that bond coupon. So there are a lot of times. I don't think China will let their developer, one of the largest developer in the Asia, to get a default or go bankrupt. I don't think China would do that in their own interest. They have to protect that industry. It's look like media is hyping. So be wary about it. Another thing is US debt limit is raised in the and passed in the US House. Then it is in the US Senate, and right, US Senate, the Democrats are even though on those 50-50, but Kamala Harris vote would go favor to Democrats. So I don't think any problem in raising that US debt limit or getting passed in Senate. So I don't think there is any risk in there. So that's all about next week events. So overall, I think it's a bullish. Let's look into our weekly chart. That SPY, our favorite ETF, it has a strong support at 442. I'm pulling SPY actually weekly candle. It's very bullish, even though ADX look like breaking out to negative side. But I'm thinking on the weekly candle, whenever it happens, it goes down, that red one. So MACD is also will rise because momentum is intact. RSI is in bullish zone. So next week I would expect this will be testing around 448 or 450. Because it's getting digested. The FOMC meeting, it didn't go down, so it held up really good. That 10-day moving average on the weekly candle. So as long as it stays close to 443, 444, the uptrend is intact. I think still we are in secular bull market. But during earning season following week, we will see jittery or kind of volatile. But for next week, I'm expecting bullish. Triple Q, this Nasdaq 100 ETF, See, overall, I am, I strongly believe growth. All those technical growth stocks are in Euphoria. We all know how this would end. People who have been trading since 96, 98, they would know what Euphoria means. That irrational exuberance that is right now showing up everywhere on the technology stocks. This is the time one has to be very careful. If at all you want to put money in tech, go with a big tech. They have a strong balance sheet to absorb the market volatility. But small cap, any mid cap technical growth stocks, they will be slaughtered in coming months. So be very careful. So overall, I'm bearish on triple Q. The money will flow out and we will get into reflationary trades, as I'm very vocal about reflationary trades like Disney, Walmart, Costco. All those reopening economic trade will pick up the stream. Also, they are very active in technology space. For example, Walmart, they started their own innovation lab on the technology side using blockchain technology. Costco, again, their e-commerce website is picking up really good. So so everyone is adapting into the latest the technology flavors to compete with Amazon kind of companies. So the reflationary trades are way to go. That's why I'm bullish on SPY but bearish on triple Q, and it has a strong support at 368. But once it breaks, watch it. It can easily slice into 330, 340, 345 area, if not at least 331. So careful on the triple Q. Um, Oil, this is the one I am actually very bullish as economy getting reopened all over the world, as when cases are going down. I'm talking about COVID cases. The first thing that would pick up is oil business, and Exxon is one gigantic oil companies that does exploration, digging, rigging, and retailing, right? All oil integration stuff they are doing. I'm very bullish on oil, and towards the year, I mean by year end, I wouldn't be surprised this would be touching the all-time high. But for now, I'm expecting at least it would reach the resistance point 59. So you have upside left at least another point, 3 to 4%. But this is something one can hold intermediate term, 3 to 4 months to let it reach around all-time high of 64, 65 year, for this year, right? So I'm bullish on Exxon. Let's look at Visa. Oh man, this Visa is really doing dead cat bounce, because you look at it breached 200-day moving average. Then it's going towards 50-day moving average. I strongly believe it has a resistance at 234. See, technically Visa looks okay, right? But fundamentally, if you look at the business, we lot of the millennials, they don't use this credit card. They don't use credit card anymore. They all use bill now pay later kind of BNPL methodology, or BNPL process via one of the apps like Affirm Holding or Square or PayPal, or even within Amazon, Costco. Everyone offers some sort of loan arrangement, mimicking that whatever credit card companies generally do. So they are the one big competitors to Visa and MasterCard. That's why fundamentally this is going down. I think Visa or MasterCard, from the business perspective, they are peaking, and millennials are really shunning their credit reports, really shunning this credit card. They wants to use their mobile phone, and leverage one of the apps to do this BNPL type pay, bill now pay later kind of payment strategy. So no wonder why this is going down. So very careful with Visa. I'm expecting that this will be going down, and again testing this 200-day moving average and sometime next month. So I'm bearish on this. So that's all folks for now. If you are interested, please subscribe to my channel. Also, please post your any favorite stock that you want me to do technical picture on it. Please post it in the comment section. I'm happy to look at and include it in my next week video. Until then, take care.